All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. I'm on just a couple minutes early here. A lot going on out there in the market this morning, and so wanted to get to it. And maybe the video may be a little bit longer than most here, probably about 20-25 minutes. But a few things I think are important that are happening out there right here, right now. But let's start with the challenge. The challenge is an all cash. And we've had three trades, about what, seven triggers here? Yeah, seven triggers, three trades for the challenge so far. So we're on a decent pace as far as that's concerned. Okay, what's the next trade? What's the next signal here? There are no new signals on the board this morning. The only upside crossover on the board right now is Halliburton. Halliburton had earnings this morning, and I've been going through them and kind of getting the bits and pieces of the conference call that'll be coming out. But this is one that we talked about early or late last year. That going into 2018 has some very easy comparables, and they could have some really lousy numbers this year, but they're going to look great. Just from a comparable standpoint, Halliburton's one of those. It's kind of Starbucks is in that category as well. And yeah, the number's not very good for Halliburton's earnings, right? Big loss and everything else, but from a comparable standpoint, it kind of looks decent. And so we do see Halliburton pushing on higher. Now, it's not a signal here this morning. You see counterparts like Schlumberger who reported on Friday, dropping here this morning. But, Halliburton does have the potential to trigger today. And so we'll see kind of how that plays out. On the downside crossover list, you'd expect a few more given the day, right? And all but one of these, you go, okay, that makes sense. But Vegas Sands, FXI, emerging markets, Alibaba, all with downside crossovers here. General Motors as well, and Triple M as well. Triple M doesn't have a chance to trigger. GM does, here today. So nothing triggering this morning, but a few with some potential on that board here today. Stocks like Alibaba, going to struggle to trigger today, coming off of new highs. And we'll talk about Baba just a little bit more here, but that's where things are. Now, we are coming off of option expiration on Friday, and with the January expiration, it's typically the biggest expiration, right? And it's very simple to understand why. If we come in and we look at options, right? Let's just take Apple, for instance, and we look at options, right? You come out and you look at the dates on these, right? If we go out more than a year, well, we have January expiration, we have June, we have September, and then we have another January, right? There's always going to be January options for the coming years with each and every stock. Now, Apple is active enough or has enough volume in it that they have a June and a September out a little longer. But when we go to other stocks, let's just say Visa, for instance, right? Visa does have it, but we tend not to see as many expirations, right? In fact, some stocks, you start to go out, all you see, if you want to go out multiple years, all you have are January. So here's Disney. It has January and June, right? But always the options are going to have January. So they tend to be the most commonly used options for long-term hedges and things like that. So when January options expire, we can see some very interesting activity go on, right? And some people go, well, it has to be upside, right? Or it has to be downside. Well, it could be either, right? Because you don't know whether most of those options are protection, hedging. Are they something where, someone went and bought the call options on Apple 2 years ago? They've been holding the call options. They're now expiring, and now they just roll them, right? And so what happens? Well, if they're going to roll it, it just means that, exercise the contract, not roll the option. Sorry, misphrase there. But if they go exercise the contract, what do they end up doing? They end up buying shares, so it puts buy pressure out there, and so it can be the type of thing where it brings in more buy pressure. It doesn't have to be a sell pressure thing. So I don't think it's something where you go, oh, mass expiration has to be downside. We have seen that before, but it's not a must here. But we tend to see some interesting activity when it comes to various stocks and options here around this expiration. And, this one, probably a little more tame than most when it comes down to it. And I know every time I say something like that, I get a little pushback, tame, what do you mean? This is wild. Well, compare it to other markets, this is really tame, in terms of magnitudes of movement, right? We're not looking at things moving 3, 4, 5%. Right, we're looking at going, oh wow, this stock's up pretty good, or this stock's down pretty good, and it's moving, less than 1% in most cases. Now there are a few exceptions out there, and let's go take a look at them. You might have heard this weekend this kind of new term for most investors, the coronavirus, right? The coronavirus. And, it's this virus that is breaking out in China and, caused Chinese markets to drop, sizably last night. And if we pull up the Chinese ETF, the FXI, you can see the big drop here. That's a massive drop, and it's erasing the entire year worth of gains in the Chinese market. If we look at the emerging market ETF, the EEM, is not quite as severe, but close, right? But close. And so we have this kind of virus outbreak, and from an investor standpoint, what does it mean? How do you trade it? What's going on? Because you don't see this all that often, but it's not unprecedented. We have seen this, many times in the past. We saw it in 2003. We saw it in 2014, where the fear of some sort of global contagion takes on and it, takes off. And, for those like my brother who are huge into zombie movies, right, it's the end of the world and all of that, and whatnot. But when it comes down to how do the markets participate, how do they act around this, there's a trend, right? There is a trend. There is something that is, very common. And I think we're seeing that here this morning. And I do think it's something where, is it going to offer play? Yeah, it will. Is it offering play right here, right now? I don't think so. But, it is something to keep an eye on. Like anything, if it worsens, right? If the coronavirus worsens, the markets are going to sell. And if it gets a little bit better, the markets are going to get bought up. So let's go out and take a look at it, some of the ways to kind of play it, and maybe how it's going to affect the challenge. Here I have a chart of 2014, and this is the S&P back in 2014. You see this little sell-off up here in September, October, right? These 3 days right here, these 3 big down days, and these gap downs here in October, there was this thing called the Ebola virus, and it was a breakout in West Africa. Ultimately killed 15,000 people, somewhere around there. Was pretty devastating. And you turn on the news, you see people flying on airplanes with masks and everything else, just trying to keep from catching or spreading the Ebola virus. And people here in the U.S. Ultimately came down with it, and there's just a lot of worries over how it would affect the global market. Well, if you think about a virus outbreak, right, what type of company is it going to affect? Well, you're right, travel companies, right? Airlines, hotels, those types of companies are going to be affected significantly if there is that type of thing. Take a look at Marriott back here. Marriott, just absolutely got clobbered when this happened. American Airlines got clobbered when this happened. And, even if we go and look at just the airline ETF when this happened, you can see airlines just got punished hard when this occurred, and a lot of consumer names will tend to get hit hard. What tends to hold up a little bit better? Well, take a look at Apple. Can you tell the Ebola virus came? Right? Yeah, it pulled back a little bit, but this isn't something that's going to be affected dramatically. Microsoft had 3 bad days in it, but not the same dramatic effect, with it when the Ebola virus came out. Now, some stocks like Adobe, they participated in the downside, pretty heavily, but for the most part, the heaviest of selling was concentrated in the more consumer names, some of the lower quality names, right? Because you think about lower quality fundamentals, and when investors are met with a challenge, right? They're met with hey, something new on board, and nobody knows exactly how it's going to play out. I've got to lower my exposure. What do they lower first? They lower the high-risk stuff first, right? And so some of the lower quality fundamental stuff gets thrown out the window a little bit quicker, and that's what we saw in 2014. What are we seeing this morning? Well, this morning, we're seeing China and the emerging markets affected because where's it happening? It's happening in China, right? That's where it's happening. That's where, that's kind of ground zero right here for it. And China is about to go into a time of year with their Lunar New Year that is the biggest travel season for China, right? And it is a big deal every single year. And this is happening right before that. And so you think and you take a look at some things. Take a look at Wynn Resorts, right? Down pretty big here today, right? Big travel area, hotel, casino there in Macau, and some of the travel that happens around this time of year is to that. Vegas Sands has some exposure there. MGM has some exposure there, albeit a little lighter. But all of those casino stocks, are down here with that, outbreak, right? If we come into some of the Chinese names, right? Tencent is one of the biggest here. Tencent Holdings, you can see a big drop here today, down 4%. China banks, right? China Construction Bank, CICHY, I believe. China Construction Bank, the ADR for it, you can see down 4%. We can even go to an insurance company for China. PNGAY is one of the largest that's on the FXI ETF. But this is a company that's had a massive breakout here over the last week, from a technical standpoint, and then dropping 5% here this morning. Consumer discretionary name, MPNGF. MPNGF, here we go. And this company, not going to even try to pronounce the name of it, but it's been on a massive run, right? Been on a massive run, pulling back 5% here today. So it's a general pullback in the Chinese, Chinese stocks. But when it comes to, most of the U.S. stocks that are affected, it's the hotels, the airlines, the travel, type names that are being affected. If you look at airlines here today, they're down 2%. They're getting sold. And, if we just look at the 1-minute chart on airlines today, right, you can see it doesn't look like the S&P chart. Airlines opened down. They've continued to fall. They've continued to slide. Even though the S&P gapped down and then shot up, it's had a shot down, a little shot up, right? The S&P doesn't have that, mass loss that, that we are seeing in some of the travel names here with it. So, that's what's happening. It's being, the focus is there, with China. And what's the bottom line? The bottom line is that ultimately, most stocks that sell off because of this will get bought back up and revisit the levels that they were at before this, right? If we take a look at Visa, it sold off on the Ebola stuff, bounced back and then some. If we look at, even Marriott back here, it sold off, bounced back, revisited those highs. Why? Because almost every single outbreak ultimately ends. Ultimately, the fear subsides, but it doesn't happen overnight, right? When it came to the Ebola virus, it was a multi-week thing, and it didn't end down at the bottom, right? This wasn't when the Ebola virus ended. In fact, it didn't really end till 2016. And some would say it still hasn't ended, but the fatalities of it really didn't end till 2016. The contagion fear of it ended down here, but that wasn't what the headlines were. The headlines were, more fear, more this, more that. But you saw stocks start to say, okay, this is priced in. Okay, let's get back to a little normal mentality here, and get rid of this overreaction. And so historically, we have seen a heavy overreaction, to these things. We saw it in 2013, we saw it in 2014, 2003, and then 2014. And the heavier the overreactions tend to be in the travel areas, and that's probably what we will see here this time. Okay, so that's what we see going on there, and I'm sure there'll be a lot more to come. In the coming weeks. This isn't going away tomorrow, type of thing. But it is a risk factor that investors now have to deal with that they didn't have to deal with before. We talked about how investors were lacking a little bit of wall of worry. Well, this is a wall of worry, and we tend to see new pieces of wall of worry get worse before they get better, and ultimately when they get better, new highs are made. And I kind of expect there's a decent chance that we see that. Is it enough to break this Teflon style bull market? We'll see. So far, from a pure market standpoint, from a pure SPX standpoint, no, right? But, again, the market is more than the SPX, right? We saw, we see small caps. Small caps are strongly in the red here this morning, without, the S&P selling off all that much. The FXI, the Chinese market down 4%. So, when we look globally, it's a little bit different than what just the SPY is. That kind of continues to be that little safe haven there, for a lot of stocks. And if you really don't want to be involved in the viral outbreak, you go buy something like Lennar, which has nothing to do with with any sort of viral outbreak, global contagion there. Could it ultimately get sold because of it? It could if the fear gets high enough, but some of these stocks are fairly immune. Now, with all this, you see a push up in the TLT tonight, right? And the TLT has had a very interesting pattern. This is the bond ETF. There's just very interesting pattern here, and is kind of mounting this little breakout element here after 6 months of consolidation, and with the Fed pretty much on hold, basically saying we're not raising rates anytime soon. To see the TLT go higher is likely. It is very likely, and we've talked about that. And is it in this breakout mode right here? It sure looks like it's trying. If it does, that would be a negative factor for some of the banks, like Bank of America, like J.P. Morgan. We're seeing these sell off, to a very minor degree today, but nothing, too severe there with them. But perhaps the thing that kind of caught my eye the most watching this morning's action, the GDX. The gold miner ETF opened up this morning slightly down and immediately saw buying. Immediately, we saw the GDX start to push on higher. And you can see here the minute chart on it. We saw this kind of just first couple minute push, then fade, and then boom, boom, boom. And it has just been up, 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 and away here since, okay? You take a look at gold, gold started to go off the lows, but gold is, now, it's still negative. Gold is still down, here a little bit today. And the gold miner ETF is up over 1%. What is this? Well, we have the gold miner ETF outperforming gold. And when we tend to see that over longer stretches of time, it tends to be very bullish. but we often will see it in short periods of time when they're ready for breakout. And we do see the gold miner ETF strongly outperforming gold here today. And so if you're looking at, hedging against some of the stuff that could happen, or you've been looking for an opportunity to get into gold, buying it here today, stop on today's lows, whether it be the GDX or GLD, or you want to go with Newmont or Barrick or some of the other names that are out there. Makes a lot of sense here. Makes a lot of sense here today, and something that I did here, this morning as I watched it. So I went with the GDX and just not a full position. I'll look to put the full position on here today, but it is something that really caught my eye this morning with everything that's going on, especially when we saw gold gap down here today, right? And gold gap down significantly, and if you look at gold overnight, it was pretty wild, in terms of its movement, right? When Asia, started to open, it was still pre-market for Asia, but we started to see the reports of the virus. We saw gold, shoot up. And then gold really sold off into the European Open, sold off even more into the U.S. Open, but really since then has been, all aboard buy, here for it since the open of the market. Okay. There's stocks out there that I'm bullish on, that I'd like to be part of, that I'd like to get into. Things like Disney. But this is the type of news that says, hey, hold off. Hold off on a Disney, right? Why travel, right? And yes, I know it's not down huge or anything like that, but these are some of the more vulnerable spots, for the market with this type of news. And if you're looking at short, you're looking for a catalyst, you have one, and you can kind of use, some of today's action to short off of, if you really are, wanting to get aggressive on that side, here as we go. But keep in mind, historically, these viral outbreaks, they take, 3-4 weeks to really play out. And within the price action, there will be rallies, right? Just take a look back here in October. The Ebola stuff was already out right here. And, we saw the market, get bought up to, some pretty big up days before some of the worst of the selling really came in. And that would be the norm, right? To see some initial selling, maybe a few bounces, a little more selling, a bounce, and then kind of 3, 4, 5 days of fear, start to come into the market. The market metrics, they tend to shift right before those, big days of fear. So we'll see how it plays out. We'll see how it plays out. Today, no real shift in the market metrics so far this morning. But again, it's way too early in the day to look at the market metrics. But the bears can at least look and go, wow, finally a day where the bullish percent index isn't going up. But it's not exactly going down either. Thanks for hopping on. Have yourselves a fantastic day, and I'll be back on with you here this afternoon. Take care.